Hello, folks. Brendan Chapman with you today. What is the options market saying about the anti-dollar play? We're going to take a look at that and more in today's edition of the TheoTRADE video for August 18th. Man, are we halfway through August already? I guess so. As we look at the S&P 500, we're basically flat on the session. What does this really tell us? I mean, we've had this nice uptrend. We've had a huge move off of the April lows. Seasonality is kind of working against us a little bit. You look at what's kind of topping the list today: industrials, cyclicals, technology, financials. I mean, it's not exactly a bearish themed day for the broader market. You notice real estate kind of taking up the lows down here, energy, materials. So we're seeing some impact going on in the broader market, and we're trying to boil it down. Now, a little over a week ago, I launched the Ghost Prince console, surveillance console. This is designed to help you cut to the chase in the market and identify the big S options trades on a daily basis that are going to provide actual ability to really jumpstart your trading success in the market and be able to find and be able to isolate trades every single day. And with all the negotiations in Ukraine and tariff deals, all this stuff, this creates significant potential for volatility in a couple of markets. First off, we have DXY, right? This is the dollar index. I guess we'd maybe do a dollar sign in there. This is the dollar index. This has a 57% weighting to the euro. So it's heavily weighted to what's happening to the euro/US dollar. It's kind of the anti-euro. And if we think about it also, in a way, it's also anti-gold, right? Gold will typically move opposite. And this is more representative of the real value of the dollar. So for example, let me just bring up gold futures here, /GC. As gold drops, the dollar's increasing in value. As gold is rising, the dollar's losing value. And again, it being a pure anti-dollar play. Another area is Bitcoin, right? Bitcoin does to some degree tend to move on these flows as well. As the dollar strengthens, Bitcoin typically goes down. As the dollar weakens, it typically goes up. There is a degree of correlation between Bitcoin and gold as an anti-dollar play. Now, Bitcoin does have a certain amount of speculation in it that does contribute to its volatility as well, because there's significant leverage in this market for Bitcoin and crypto. So we're kind of thinking about, well, where's Bitcoin going? Bitcoin's basically trading almost in a channel between 114 to 122,000. We look at /GC. I mean, gold's been effectively in a range for a while. Yeah, maybe mostly between 3,300 and 3,400. We've kind of pulled back in both recently. And so the question is, are we about to see a bounce off support in gold and Bitcoin? Well, again, we're looking at the markets here. We're seeing there's a lot of indecision, but we're certainly in the lower end of the range. You might expect the market to rise. But one of the things that we do with Ghost Prince, we try to identify the potential, the pressure in the system before the move happens. And so for this, we look at the options market and try to make a decision. Now, there's a few things going on here that are interesting. Number one, if we look at the VIX, right? The VIX is fairly low. We kind of popped a little bit early. We're fading from the high today. The VIX is sitting right around 15. But look at what's going on behind the scenes, right? We go to product depth here. You look at the VIX futures market. We're basically pricing in that same 30-day window here between Sep and October. Well, September's at 18, October's close to 20. If I take an average, it's about 19. Well, 19 is significantly higher than the VIX at 15. And so what I do is say, look, we can use this and take an average of this, but there's a very big difference here and a big difference between the spot 30-day VIX here. What I have found over the many 20 years I've done this or looked at this, I found that the 3-month VIX is a pretty good approximation of what's going on in the futures market using the September and October contracts that if you were to average those two out, approximates a 30-day weighted for like similar to the VIX. And so what I find is if I take the ratio of the 3-month VIX to the 1-month VIX, I'm saying, okay, well, how much higher is the 3-month VIX over the 1 month? And you're seeing right now today, it's about 23% higher. That's pretty dang close to what the futures are pricing in against that spot 30-day VIX VIX index. The market is pricing significant volatility in the future. If we look at hedging, SKEW, SKEW, we ticked up last Friday to 153. We may see a tick higher today. This is very, very elevated. It's representative of the fact that institutions are hedged in case the market are hedging themselves against a market decline. Well, what does this all mean in terms of the dollar and gold and Bitcoin? It means that the market right now, we're talking about risk assets in the stock market. They're hedging the downside potential right now. And right now, they're pricing in a significant rise in volatility over the course of the next 30 days. As we translate this to what's going on in the gold market, the fact that we're just consolidating right now, we're trading in a range, and we're looking at Bitcoin, the same scenario. We're trading a range, maybe building a channel, support down here, maybe around 110-ish. Again, what is the next direction of the market? Well, again, we're expecting maybe a 5 to 10% correction in equities. That generally is relatively bearish for Bitcoin. Not necessarily so directly bearish for gold, but if the dollar strengthens, the downside pressure in gold's pretty significant. So how is the option market taking all of this stuff that's going on in the market right now and boiling it down to trades? Well, we're going to cut to the chase here. We're going to go straight to the console and we're going to identify what's happening. Now, if we look, for example, at gold, we'll start off here. And you'll notice right here, this was a spread trade. That's a spread tag. Again, we're looking for stuff happening that are occurring at the same time. You notice that the top two occurred at the same time and the bottom two occurred at the same time. They're part of the same trade. And if you look right here on the call side, what do? The 3:30 calls for 21st of November, they sold the calls, 10,000 contracts worth, right? Significantly greater than the open interest. We know they're opening these. And what do they do with the 297 puts for 21 November? They bought them. So here is this is like a synthetic trade where they're selling calls and buying puts. Could it be a hedge? Sure. Either scenario, it's bearish for gold. Well, we flip this around. We go a month further out in time, a smaller trade, 5,000 contracts. They bought the 320 and sold the 325s. So as we go back and we translate this back to the gold market for GLD, to the downside, we're looking at 297-ish, right? And the upside, well, let's go back and check what the upside was in this. We're looking at 325. In essence, what's happening right now? 325 is a slight breakout to the upside here to 325. And again, we're looking at downside, kind of a slight breakout here to 297. The point being is that what's expected right now is volatility. They're expecting that by the end of the year, gold is going to break out. And a lot of the directional ability of gold to break out is going to come down to, are we going to see a crisis? Are we going to see a sell-off in the broader market that may create near-term dollar strength and drive gold lower? Or are we in the cusp of something that may avoid or avert any near-term potential real selling? And maybe we start to see the dollar weaken as maybe the government starts to engage in more of kind of a pseudo yield curve control in the bond market. And it may help kind of drive up gold price here as we're weakening our currency and coordinated with Fed rate cuts. We'll see. But the name of the game today, and again, this kind of stands out. These are sizable trades for GLD. The name of the game is volatility. Okay, we're expecting a breakout, and we could potentially hit on both. You might hit down by November and then up by December. Is possible, but again, we're expecting is the gold may get more volatile here in the coming months. Then we look at IBIT. This is the Bitcoin ETF, and for this, we're going to isolate a little bit further here. We're looking at stuff that's traded at the ask that's being bought. These are not spreads, right? But on the October 17, 61 puts, 40,000 contracts, 40,500 contracts bought at the ask price. Now, if you look on the call side at the same strike price, there was some calls maybe bought or sold between the market. Either way, the effect is the same on IBIT. We're talking about 61 puts being bought. Now, again, we talk about the correlation here between Bitcoin. There's the bell, folks. Between Bitcoin and the stock market. Again, there is a degree of positive correlation. This is generally a risk asset. But when we start to look at what's happening in the Bitcoin space, notice we hit for maybe a slightly higher high there. We also had a kind of a breakout of this trend line across the lows. And if you were to bring up an RSI study, This will help. This is a good indicator for looking at divergences in price. And what we're seeing right now is that we're seeing a very significant deceleration in Bitcoin, especially look at the last two highs here, slightly higher high, definitely a lower RSI. Even this high here did not take out the high we saw back here in the RSI. We've seen two lower highs, a divergence indication that generally leads to a breakdown. You look at the last time we saw this scenario going into the highs here, again, divergence. This divergence lasted maybe about a couple of months, and then we began to see it break down. We broke down from 61 back to 43. That was basically a 30% decline off of 70. What's a 30% decline? That's over $20. We're talking 50 if we get a similar type retracement or correction. And we draw our fibs here from the low to the high at this kind of 50, 55 area. That's about a 61%. We may push all the way to 423, which is back to 45 again. Now, again, what was traded today? We're talking 61 puts at 40,000 contracts that were traded in one trade. At today, we're talking about gold. There's a degree of uncertainty, maybe more of a downside bias, but the downside bias in IBIT is definitive, right? We're seeing technical weakness. We're seeing kind of internal weakness by virtue of today's prints. And again, beware right now. This might be a good time if you're long Bitcoin to take some profits. You also might consider taking a downside shot in EBIT. 32 days out for September, for example, the volatility is relatively favorable for buying, let's say, a 65 and selling a 63. These are the kinds of trades we do all the time within Ghost Prints, trying to take advantage of option pricing and these large option prints that we're seeing in the market. 68-cent cost. Try to close out for about 70%. Maybe you can close for $1.15, $1.20. Boom, you're done. And you don't even need this to get to 63 to get to do that. So a small relative pullback at a time in the next 30 days, at a time where the options market's positioning more bearishly in IBIT, but definitely positioning for volatility in gold. This may not be a bad trade to consider. Playing whack-a-mole, we may go here before you go there in the next 30. Well, folks, that's all I got for today. We'll catch you back in next week's video. You have a great one. Thank you.